to recently say that they find this attractive. What's going on with bank loans in particular that have attracted the interest, and does it continue into 2014?
Sure. I think the interest this year has been the floating rate nature of the loan. So we saw rates back up. 10-year Treasury went from 160 to 270. Very volatile summer where a lot of fixed income asset classes lost money over the summer. Bank loans did not. They held their own during May and June, and by July were rebounding. So it's a very defensive asset class in an environment where folks are very concerned about rising rates.
And the credit quality of these companies is improving, is it not? So that also draws in money.
It is, yes. I mean, these are still leveraged loans. So as the name implies, these are levered companies or high yield companies, but leverage has continued to decline since 2009. One of the leverage metrics that folks take a look at is debt to EBITDA, which is a proxy for leverage for the market. That's declined from 5.25 turns to 4 turns over the last 4 years.
So what would be the risk in holding these loans? Is it that the interest rate picture shifts again, or the economy perhaps stumbles and then it's a little bit more difficult for these companies?
Sure, it's more the economy. The leveraged loan market needs an improving economy. An improving economy allows companies to grow into their balance sheets, so the risk is less interest rate focused and more on the economy.
And contrast investing in bank loans with a high yield investment in terms of pros and cons.
Sure, very similar credit quality. A lot of the companies issue both bank loans and bonds. So in essence, it's a question of your risk profile, because you are farther from the assets than you are in a loan. In a loan, you have first lien on assets. So for that extra security, you're earning a little bit less yield than you would in a high yield bond. But a high yield bond also has longer duration. So in a rising rate environment, in the short term, you would be more impacted in high yield bonds.